Frank Napolitano from Mortgage Brokers Ottawa. Good morning.
Good morning.
Is it a good morning, or people?
I'm glad I beat the traffic in.
Yeah, no kidding.
So.
People are talking about this rate hike.
Yeah.
And
just a little one.
This is not panic button time.
Well, it's not panic button time. I mean, certainly I received a number of calls yesterday from customers who were in variable rate mortgages. Frank, should I convert now? Should I convert? It's like, no. You've been in, some customers have been at 2.25% prime less 3/4 for the last 2.5 years since prime changed, and they've got another year or two left on it, so they can make a decision if they want to convert now. But prime's not expected to go anywhere. So Bank of Canada prime, we're seeing the fluctuations in the bond markets, and that's why we're seeing the fixed markets or the fixed mortgage rates change. But again, they're only expected to be minor changes, a quarter point, maybe here or there. So nothing
small
major
adjustments
right
due to markets. So
we had some positive numbers right on Friday with the job report. So that spiked the bond markets. I mean, there's that thinking that maybe the economy is about to recover, but most will say that it's just a little blip in the system. And
well, it's interesting because we talk about the economy looking like it's on the upswing, but it's not just Canada's economy.
No.
Right?
It's a global economy that's going to affect what's going to happen with interest rates moving forward, and most countries are in no position to do anything with their interest rates. Therefore, the status quo will be in Canada as well, I think.
So tell me about this time in history when it comes to interest rates.
Have we historic lows? Like, there's no reason for anyone to panic. There were days when 6% was a magical number.
I remember those days. People were freaking out when we went down to 6. That's right. And everybody was like, this is great. We could afford so much.
It's not that long ago, because right now we've got customers that are coming in that their 5-year mortgages are coming up for maturity, and they've been at 5.25% for the last 5 years.
So don't forget, 299 is amazing.
Amazing rate still. It really is. And the 364, 369 for a 10-year is becoming even more popular right now.
Okay, so this is where people, I think, have trouble making a decision, and it might be because of some facts that they may be missing, or it's just a harder decision to make. Variable, 5-year, 10-year fixed. Yep. What are you recommending right now?
Well, variable's tough to recommend because if interest rates are on the way up and if we bottomed out, then variable's a tough mortgage to take, even though you'll start off with a lower rate. At some point, prime's going to start to go up, and then you'll end up on the short end of the stick.
Okay.
So variable is not as popular a mortgage as it was 3-4 years ago when rates were on the downtrend. The 5 and the 10-year, older customers will jump all over the 10-year only because they've been through this 6, 7, 8, 9%, and they look at 3.64 over 10 years, and they're saying, 10 years from now, I won't even probably have a mortgage, or my mortgage will be very minimal, so I don't have to worry about interest rates.
That's lower than my 5-year fixed by far.
For most people, it is. And most people that are coming off the 5-year at 5.25 are looking at it saying, so I can get 10-year, keep my payments the same, pay off my mortgage quicker, and I don't have to worry about anything, and they're jumping all over that. So again, some people are looking at, it's the old adage where I'll take all the money that I can save now. It's all about now. So the 5-year is popular from that perspective because there's that 3/4 point difference, and
but imagine,
some people look at it.
One of the things that I love about it is that for 10 years I don't have to think about it, and I know what that payment's going to be every month. There's no change.
Yeah, and even if you're, and again, we need to emphasize the fact that even if you're thinking of buying a new home in 3 or 4 years, you actually get to port that mortgage over to your new house for that amount. So you get to carry that interest rate to your new house, and therefore whatever you're adding to it is at those, whatever the interest rates are at that time, you blend the two together, you're going to be very close to that interest rate just the same. So
Frank Napolitano, always great information. MortgageBrokersOttawa.com if you need more. Thanks for coming in.
Pleasure.
All right, we're back with headlines in just a moment on CTV Morning Live.